There's a lot of ways to do technical analysis, and I think the wrong way is to simply just look at the US dollar chart and draw random lines, right? This is the near US dollar chart, and this is how you usually see technical analysis being done. People draw things and completely ignore statistics, data, or the impact of the overall crypto market on individual altcoins. Because when we look at this, right, when we look, for example, here at this bottom on the 18th of July 2021, and we look at Bitcoin's price during that time, we also see a low over here. The same is true for Ethereum. Around the 18th, 19th of July, we had our low. And the same is true for the tops, right? The 8th of November, this is Ethereum. The 8th of November, this is Bitcoin. And this is the 8th of November for near. Not the absolute top, but still we can see there is a lot of correlation within crypto. So just drawing lines on an altcoin chart, an altcoin US dollar chart is probably not going to cut it. What I like to do is I like to test different trading strategies based on their historical performance. And one pretty straightforward way to time the market is to try to follow the trend. So you don't want to be in the market, for example, when the price is below a moving average, right? We've got negative momentum. We want to be outside of the market or even bet on falling prices during those periods. And when the price is above a moving average, we want to bet on rising prices. So we try to ride the general momentum. Now, when doing this, the question is, what's the best duration? Because when we add a moving average to the chart, let's maybe draw this one in white over here, we could average out 9 days. This is the standard setting in TradingView. We could also increase the duration, right? We could average out maybe 40 days or 50 days, right? We could take a very different duration and then bet on rising and falling prices based on that moving average. Now, what's the best duration here? What at least historically would have worked the best? That's where backtesting comes in. This is where we simulate buying and selling, and this is what I've done with this Excel sheet, which, by the way, you can download at thebitcoinstrategy.com. The link is in the video description. It's down here. It's a backtest that starts in October of 2020 all the way to today. With each trade, we've got a fee of 0.1%. That's Binance's non-discount trading fees. And then we've got a macro that simulates buying and selling based on different moving averages. Now, on this computer, this takes a bit of a time, especially while recording. But it's basically running now through all of those different scenarios. What length of a moving average should we take? What kind of an annualized performance would we get if we go long when the price is above a moving average, and if we bet on falling prices, so we go short when the price is below a certain moving average. So we are now going through all of those different durations, the daily moving averages. We're checking both the simple moving average and the exponential moving average. The sheet is also doing a backtest on the double exponential moving average if that's your thing. In this particular example, it didn't work that well. But here, look at this, right? Buying and holding over this time period would have given us roughly 100% per annum. But we've got moving average trading strategies that are up to 560% per annum. So we can show this data in a chart. So let's go here to charts. On the x-axis, we've got the duration of the moving average in days. And on the y-axis, we've got the annualized performance. And so in black, we see buying and holding. And we can see a lot of those moving averages, they outperform buying and holding. So let's look specifically now at the 30-day simple and at the 27-day exponential moving average. When we enter those values over here, we can then scroll down in that sheet and look at the historical performance. And we can see with this recent crash, we would have made money because we would have bet on falling prices. Now, the outperformance is not super consistent, right? Sometimes just buying and holding is outperforming. But especially during bear markets like this, it does make sense to try to time the market. This is then how that looks like, right? We would have gone short on the 22nd of April and made money during this whole decline. Now, why am I making this video in particular? There's two reasons. First of all, it had been requested. I haven't done that backtest for quite a while, and there was a request here in one of those premium Telegram groups to rerun those backtests. So I've done that. The second reason is we now see a potential turnaround. Now, no strategy is perfect, right? And as mentioned here, we did even have times where just buying and holding would have outperformed. But if you're looking for an entry point for near, if you're considering to start buying again for a medium-term speculative bet, if we go up just slightly, just another 2 or 3% from here. So when we zoom in, the exponential moving average is currently at $3.84. If we close above this, so at midnight UTC time zone, we close above this, then this might be, at least historically speaking, a good signal. Now, sometimes we have our failed signals here, right? So we end up buying high and selling low and shorting for falling prices just to see again a rise. That's why we do the backtests. It's very hard to just estimate this by eyeballing. But if we simply want to have another tool in our toolbox, something that's better just than randomly taking the 20-day or the 50-day, if we actually want to optimize our strategy and take the best bet we can, then this is what you should be looking at. Now, I've done these backtests for a lot of altcoins. So that's here at thebitcoinstrategy.com in the best moving average section. There's also a code both for the simple and the exponential moving average that you can then add to TradingView. Meaning when you then toggle between different assets, you will see the best moving average for each of those assets. So you can then time particular assets in a way that worked historically the best, and you don't have to adjust the moving average duration each time you change the ticker symbol over here. So there's a bit of a convenience here. You don't have to run all of these backtests manually with the Excel sheet. You can also just simply ask me in that Telegram group to do a backtest. I do premium videos every single day. I simply found it very interesting that we now see the first altcoins actually recovering to a degree that might be significant. These signals, they tend to work best when we come out of an extensive bear market. And that's pretty much where we are at right now, right? Previously, we also went down by 66% or so. Then we crossed the moving averages and we got our nice rally. This time, again, we went down by almost 80% even, and we are about to cross both moving averages. So this is worth noting. Simply look at them. Keep an eye on the 30-day simple and 27-day exponential moving average, and just add this to your toolbox. Of course, don't forget to do fundamental research as well, but if you supplement this with TA, then don't just take random stuff. I think it's better to use approaches that historically outperformed just buying and holding. If you haven't yet subscribed, feel free to do so. I publish videos regularly. A like would be appreciated as well, of course. It will help the channel grow. You might also want to check out our public Telegram group. That's to be found at Bitcoin Strategy channel. Simply search for that within the Telegram app. There's another video where I discuss the current status of the bear market. Feel free to check that out. It's a bit of a different format, a talking head video. Hope to see you in that video, and thanks for watching this one. Bye-bye.